Let's start off with President Biden's comments about the risk of a slight recession. As my colleague just said, a slight recession is still a recession. What does that do to the mindset, in particular when it comes to the consumer and the household?
Yeah, it's a bit interesting to hear President Biden say that. I mean, that is certainly in line with our base case. So we are expecting a mild recession, if you call that a slight recession or not, a mild recession in 2023. I think people are aware that that is definitely a risk, even ahead of his comments. Our base case is it would be mild. You know, you would have a couple quarters of negative growth, but it would also mean a rise in the unemployment rate. We're expecting that to rise above 5% by the end of next year.
Yeah, you take a look at the labour market at the moment, that is the kind of thing that we keep falling back on as being resilient. These numbers, even if we see that softening, is still historically pretty high, right? Where do you see the weaknesses that we might not be seeing here?
Yeah, I mean, labour market data is generally some of the last to show the weakness. You know, you first see activity slowing, and then you see, negative monthly jobs prints like we had a week ago. Of course, not negative yet, but we would expect that you see that in 2023. We'll be watching for signs, in initial jobless claims, for instance, that maybe those are starting to rise. I mean, unfortunately, this is just the consequence of very aggressive Fed policy. I wouldn't necessarily call it a mistake because it could just be intentional. That is what the Fed needs to do, is loosen the labor market in order to control inflation.
The policy error risk is really top of mind, right? And I want to throw up this chart, which I think is really interesting. Swaps markets are pricing a peak for Fed rates at about March next year, and then it starts coming down. So does that suggest that a policy mistake might force a pivot or a pause?
I think, at least our expectation, we're forecasting similar for the Fed, so we're expecting, a policy rate that gets to 450 to 475 by Q1 of next year. Our expectation is not necessarily, a policy mistake. It's just that maybe by then rates are restrictive enough that you see activity slowing, you see the starting to see the signs that inflation might return closer to target. But unlike what the market is expecting, we would think that rates need to stay restrictive for all of next year, just to be sure that you are headed on the right track for inflation coming lower. We wouldn't think that those cuts that the market is pricing would happen until 2024.
When you take a look at the way that price pressures are playing out, even here in Australia where we are, you see quite clearly that household sentiment, the consumer, is deteriorating, whereas corporates are holding up actually quite well. How do you, make that inflation, impact a little bit more equivalent? Because it is also an equality issue when it comes to how it's impacting people in the US.
Yeah, I'd say in the US, we do still see a really resilient consumer for right now, and a lot of that has to do with the fact that the labor market has been so strong and still is very strong. So you do have a low unemployment rate, you do have nominal labor incomes that are actually still, on aggregate terms, outpacing the pace of inflation. Eventually you would see that sentiment even worsening as you start to see layoffs, you start to see a weaker labor market. But for right now, I'd say that's still a factor that's keeping inflation pretty strong. We are expecting that you start to see some slowing in goods prices. People are not spending as much on goods. But I'd say the risks are that, even for those types of prices, they could stay stronger for longer.
The other two risks, and as obviously a topic has been just market dysfunction globally, particularly when you take a look at what's happening with the UK, but treasury market dysfunction, liquidity concerns, as well as the strength of the dollar being just so stubbornly high. Are these worries when it comes to, what you talk about with clients, for example? Yeah,
I would say it's certainly a question that we get asked. It's something that the Fed is watching, but I don't really see any imbalances just yet that would cause, say, a pivot from the Fed. So this is the question we've gotten asked the last couple of weeks, especially is this the Fed pivot? Is that what we should be expecting? The Fed will, of course, pay attention to global financial stability concerns. A strong dollar is part of that, but it's ultimately going to be still just domestic conditions and what the Fed is seeing on inflation and the underlying drivers of inflation, which is the tight labor market, which eventually will form policy.
Is a wage price spiral a risk that they should be watching for?
Yeah, we've definitely seen, signs of this wage price dynamic. Maybe you don't call it a spiral, but that's certainly what we've seen as the driver of underlying inflation for some time. And I think that still is the driver. I think the Fed knows that at this point. You hear Chair Powell talking a lot about that ratio of job openings to the number of unemployed people in the economy. That's been around 2 for about 6 months or so. It's fallen a little bit, 1.7 or so now. But that's just a sign of a really tight labor market, and that's what's driven wage growth that's around 5 or 6%, and that's ultimately what's driving inflation that is too high also.
At what point does that strong currency become an issue? Because we know it's going to be an issue going into earnings for the FX exposure for a lot of companies.
Yeah, I'd say for individual corporations, that definitely could be a factor. For the macro economy, a strong dollar on the margin would actually benefit the Fed. That is less inflationary pressure, some deflationary pressure. But unfortunately for the U.S., that pass-through of a really strong dollar to inflation is just really small. So I don't think it's enough, to cause much comfort that you're bringing inflation down because of a strong dollar.